short trades. So you're only going to see long trades until the market crosses back below. So that's how the Atlas line works. It'll give you signals based on whether price is trading above or price is trading below. So it has nothing to do with the trade scalper. If you want to use it as a filter, some traders do. Fantastic. Only take long trades. And again, if this changes to the short side, which it may, then you focus on short trades when it comes to scalping. But you don't have to do it that way. But that's what a lot of traders do. So that's the Atlas line for today so far. All right, good. Good, very good. Let me just push this out of the way here. All right, so we have a few trades for the scalper, a few trades for the Atlas line as well. A lot of trades. You don't have to take every single trade. Another method that we offer called the at the open. So looking again, just focusing on the E-mini S&P. I'll bring up the at the open here. Let's take a look at what that looks like. Okay, so this is the at the open so far for today. With the at the open method, it's a one trade and done, typically in the morning. So we're only looking for the initial push, either up or down for the morning to get a signal. I like the 5-minute chart because for many years, the 5-minute chart is the best chart that is, and the reason is because everything is compatible here with the 5-minute chart. If you look at the pre-selected times, 60-minute, 30-minute, 15-minute, 10-minute, 5, these are all divisible by 5. Even the 1 or the 3 is divisible by the 5 when it comes to the 15. So if you look at a move that's about to happen, the 5-minute chart typically catches it, whether it's based off of the hourly chart or the half-hour chart or the quarter-hour chart. So the 5-minute chart is perfect. But if you look here at the ATR, let me just add the ATR to the chart. The problem with these recent months that we have, again, look at how strong the volatility is on the 5-minute chart. So what this tells me, this being almost 9 points, is that every candle that you see from high to low has a potential of being close to 9 points. That is very volatile, and I would not recommend that anyone try to trade under these conditions based off of 5-minute chart signals. So for that reason, I think we need to adapt to this, right? As traders, we have to adapt, and we look at a chart that is more in line to what we can achieve and our risk. So a 1-minute chart, you can see, just have a 1-minute chart here on the scalper. Same thing, 3 points, 3¼ points. This here now allows me to stay within the 5 and 1. So within 5 points and 1 point, we have trades. And this is what everyone should be looking at, a 1-minute chart, because of the volatility and the risk. Under 5 points, you're good. And for the at the open method, you can still use the at the open method. And there's not a signal as of yet. If you want to look at yesterday on the at the open for the 1-minute chart, so for the at the open yesterday, it happened about 10:47 or so to go short, and the short signal was 30.97 to go short. And it gives you a little bit of a dash right there. I don't know if you can see that little dash there. It tells you that's where you should go short. 30.97. There's plenty of time. It's not as if, like the scalper, that we have to be ready and we have to jump in and jump out. The at the open is not intended to be that way. It's intended to know where you're going to go short in advance, wait for it to happen, or go long, wait for it to happen. It's just one trade and you're done. And again, I look at the ATR, so in reality, I don't know that the market is going to do all of this, right? So I don't know if it's going to move this distance. So I look at the ATR. It says about 3 points, 3.25 points. If you want to be conservative, just say 3 points, right? You don't have to take 3.5, just take 3 points. And you get in and you get out. The maximum risk on a trade like this is the catastrophic stop, which is 2 times the ATR, maximum of 5 points. So I'm never risking more than 5 points, and that's the reason why I have this here. And a time-based stop, which is 4 candles, whether 4 5-minute candles, 4 1-minute candles, 4 hourly candles. I don't want to stay in this more than 4 candles. We should be able to make some type of profit. Even if you want to trail a stop, at least be in profit territory after 4 candles before trailing a stop. And so that's the at the open for yesterday. And for today, again, we don't have anything as of yet. We may, but not yet. And if it happens, we can see it. If it happens within the time period that we're here, we can see the signal to go short on the at the open as well. And let me just take a look here if there's anything that's happened on the range chart. On the second, no, not yet. Let me just push this out of the way if I can. All right, so now the Atlas line is beginning to, or the price is beginning to drop below the Atlas line. So the way the Atlas line works, if you're wondering, how do these signals appear? This will be a short signal only after 2 consecutive candles close below the Atlas line. That's the main signal, not including the pullback or strength trades or bounce trades that it produces. Just the main signal, right? The bounce trade would be something like this candle right here, this green candle here, that's bouncing off the Atlas line. This would be a signal to go long if I turned on the bounce signals. But the main signals here would be 2 consecutive candles. So on this 1-minute chart, you can see this would be 1 candle, and this would be a second candle. And one of the things that I like to do, I'd like to teach you the method that you're trading. So it's not just follow the signals. I want you to know in advance the signal is going to occur. Generally speaking, we know if it's going to be long or short, and we don't know the price until the candle closes. So that's the signal to go short because 2 consecutive candles have closed below the Atlas line. So you can prepare for it. You can be ready for it. We can look at the ATR, which is about 4 points. The catastrophic stop is 5. The goal is 4 points. So let me just put this here, 4 points. And you don't have to take the full 4-point ATR, but that's the expectation based on the last 4 candles of the ATR. So at least you have a general idea of the target, or the movement, I should say, and the target that can be expected. And you're good to go. Anyone have any questions on the Atlas line trade that you're seeing here? And also for the scalp trades, I would suggest that scalping to the short side, at least for right now, would be a good opportunity because we're below the Atlas line. So any signal that you see that is short that occurs on the trade scalper, better than fighting this. We don't want to fight the trend. We want to, in fact, go with the trend, whatever the trend happens to be at the moment, and you're in a better position. You're not fighting anything. Now, catching tops and catching bottoms is not as hard as you may think, but it's not something that I advocate. I don't want anyone to pick a top or pick a bottom. There's a tool that I have called the roadmap that allows you to pick and choose tops and bottoms. It's not based off of double tops or double bottoms or previous support or previous resistance. It's not based off of that. It's based off of profit taking actually when it happens. So when the market moves a certain distance, for example, let me show you here, for example, if I could. When the market moves a certain distance, you can, in essence, think that the market is in a trend down. Or when the market moves a certain distance, you can say the market's in a trend up. But once traders begin to buy and buy and buy and buy and buy and buy, once that happens, at some point, you have to think, well, we're going to take a profit target on all this buying that's occurring. And the same thing is happening when the market is sold. There's traders selling and selling and selling and selling and selling and selling. And then at some point, the market is going to stop and the traders who are short are going to buy it back. So this roadmap method and the roadmap indicator and software is teaching you where in the future the market will be bought back or the profit taking will occur. So the way that I like to teach this and explain this is, let's say, for example, that you and me, that we're selling 5 contracts, 1 contract, 5 contracts, 5 contracts, 5 contract, 1 contract, 2 contracts, and the market's going down based on all the traders that are selling. And you're accumulating, right? So the larger traders are accumulating 5, then they have 10, then they have 20, then they have 30, and they have 40, and so on and so on. And at some point, what's going to happen is they're going to say, well, I'm in the money. It's called being in the money when you're in profit territory and you're in the money. And at this point, I want to take my profit. When it comes to taking profit on these larger traders, whether you call them commercials or large speculators or small speculators based on the Commitment of Traders report, whatever the case may be, they're not going to exit the same way that they entered. They're going to exit to take their profit very fast, very hard, and very strong. And when that occurs, there's a huge overrun of trades that occur in the opposite direction because now they're getting out at 20s, 30s, 50s, and it's just overtaking and overriding everyone, you and me and all the little guys who are selling slowly into this trend. And so you see many times that the market will, on a dime, just switch and flip. So if you're looking at, for example, this is a 1 minute chart, but if you look at a 5 minute chart, you probably see the market do this, and then all of a sudden do this. And the same thing, the market did this, and then all of a sudden do this. What I want to teach you is to anticipate when this occurs, that you will be ready not to jump in front of this moving train that's going to run you over. So my goal is to look at and understand when this is going to occur in order to avoid taking or getting trapped into a situation like this. That's the idea behind the roadmap. And it's based off of when these traders are going to take profit. It has nothing to do with previous support or previous resistance or double tops or double bottoms, any of the other stuff that you've probably seen. It has more to do with the power that is thrown into the market right as they're trading to take their profit. We're going to avoid that area. Move this out of the way here. That's the roadmap indicator. Okay, so the Atlas line is, or the price is trading below the Atlas line. I see here more scalp signals indicating to go short. Oh, and there's an at the open here as well to go short. So the at the open is short and it coincides with the Atlas line. Oh, that's good. And the double wick, one of the signals that the trade scalper produces is called a double wick trade. And this double wick trade is going short. This little triangle here that you're seeing, not sure if you can see that, that's indicating where you're going to go short. So this little triangle here is indicating 3057 quarter, which is exactly the same as the text that appears. And so 3057 quarter, 3 3/4 of a point. I don't want you to think that you're always going to get 3 3/4 of a point. So even if you just took 2 or 2.5, even 3, it's all based off the ATR. So at the time when this trigger appeared here at 3057 quarter at 4 points, be conservative. Take 2.5, take 2, take 3. I wouldn't suggest that you go for the full 4. It's a scalp trade. Remember, you want to get in and out easily. You don't want to get in and out and be left out because you're just holding out for one tick. And so you're filled here, or you're filled here, or you're filled here. But regardless, the 2 points or 3 points was made. The market moved, definitely moved down in your favor. So that's the goal. Now, after 5 trades, 4 trades, 6 trades, stop. Stop for the day. Don't continue. If you're up, if you've made a couple $100, just trading one contract or even the micro E-minis, you're finished. It's a Friday. Go enjoy your family. Go enjoy the weekend. Don't be glued to the charts day in and day out. Yep. So we do install, Jason, just so you know, we install the software if you need. We do remote support for you. So if you need help with installing the Trade Scalper or the courses, or even if you join the group mentorship class, if you need help, we do remote installation. So we install everything for you, set up a time and a day that works for you, and then you're ready to go. And we record all of the classes. So even if you can't attend because of your current work schedule, when you come home, the video will be waiting for you to review on your member account. We give everybody a member account, and you can review the videos. And then email me questions. If you have questions, say, hey, I saw this, I don't understand this, or um, email me, and usually one of our guys or myself will respond, making sure that's clear. If you want to learn more about trading, visit DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.